Saylor's company, one of the biggest Bitcoin accumulators in the MicroStrategy, is selling Bitcoin left and right, friends. Now, a new package has just been approved. The company has been granted the authority to sell $1.25 billion worth of Bitcoin. But on the other hand, when we look at it, Bitcoin and altcoins are slowly rising. They're rising quietly, without much noise. While everyone was in fear, the US and China injected $40 billion into the market in just 1 week, friends. While some countries are burning money, others are injecting money right now. Also, today we'll talk about an on-chain data point. There's a bottom signal on-chain that no one is talking about, one we last saw during the FTX period. I'll explain this. And we had these stablecoins in our pockets: TUSD, USDT, USDC. A new one of these is coming. Now there's a mechanism that will let us make money called OpenUSD. We'll talk about this. Let's get into our video. Friends, right now you see a chart on the screen. This chart shows the money that countries have injected into or withdrawn from the market. As you know, central banks can both inject money and withdraw money. Since the beginning of 2026, the US has withdrawn about $150 billion. Europe has withdrawn nearly $200 billion in total. The UK alone has withdrawn $60 billion, friends. In Switzerland, there has been a withdrawal of between $20 and $30 billion. But while the entire Western bloc is withdrawing money, there is an Eastern bloc injecting money, China. In the first half of this year alone, China injected $300 billion into the market, friends, and for the rest of the year, it will inject another $200 billion. These are positive developments. Now, one side wants to cool down the economy, while the other hasn't faced inflation. There is disinflation in China. That's why they can inject money comfortably, and the world economy somehow finds its balance. But this week, something different happened. There was an injection from the US side, and the markets immediately reacted. Gold, silver, and cryptocurrencies became active. The US injected $10 billion in a week. With China, it hit $40 billion, meaning the Fed is pulling money out. Who is injecting the money? The US Treasury? Right now, the US Treasury has $750 billion in its coffers, friends. When it collects taxes, it currently has excess money in its coffers, and it uses this money weekly to buy back old bonds. Actually, they've been doing this for the past 2 years, but this year and over the last 2 years, they haven't been doing it very aggressively. It's been moving slowly. So it was progressing at around $500 million, $1 billion, at most $2 billion per week. But this week, something different happened and $10 billion was injected into the market, especially after the disappointing unemployment data. So thanks to the combined $40 billion injection from these two countries and the ongoing injections from China expected in the coming period, gold and silver recovered a bit this week. Bitcoin and other cryptocurrencies are also trying to rise a little. But don't forget this. According to the current projections, capital outflows in the Western bloc will continue in the second half of the year. Now, back in the so-called bull seasons of crypto, one of the things we followed most closely was on-chain data. When the market is good, on-chain data is very valuable. When the market is bad, especially during seasons with these macroeconomic indicators and geopolitical crises, on-chain data may no longer be very useful. But there is one piece of on-chain data that is valuable. Now, I'm going to tell you about that data. This could be a bottom signal, but before I share the data, I would be very happy if you subscribe to the channel while this video continues. I would be very happy if you like the video, and I'd also appreciate it if you leave a comment. As the few people remaining in the ecosystem when crypto is down, we need to keep supporting each other. The supply and loss on the Bitcoin network has exceeded 10.1 million coins, and for the first time since the FTX crisis in 2022, it is now greater than the supply in profit. This is generally interpreted as follows: the selling pressure is now breaking. From this point on, there are more people in loss, and the number of people wanting to sell is decreasing. This is a good indicator. This is perceived as a bottom signal. And think about it this way. What did I say? 2022? So 4 years? Some people think that this 4-year cycle in crypto is completely over. But actually, when we look at the chart, the 4-year cycle is still continuing, friends. It's just that during the season of the 4-year cycle when we were supposed to make money, bad developments happened in the world. Bad things occurred. That's why the period when we could make money there wasn't as enthusiastic as before. Otherwise, there were still people who made money. So I don't think the 4-year cycle is over. By the way, friends, we might experience a nice bull market, but if you don't have any crypto yet, you can sign up for Binance right now using the QR code you see on the screen and complete your identity verification. By using my referral link, that is, the link on the screen, you can get a 20% commission discount and also benefit from a welcome bonus of up to $600. Now, friends, we've come to the most interesting part. Strategy has been accumulating Bitcoin for years, but during this period, they started selling Bitcoin. But the funny part is, every time Strategy said, I'm going to buy Bitcoin, I'm buying, Bitcoin dropped. It really did drop. It was a complete sell signal, and the exact opposite happened. Now they're starting to sell, and after every news of them selling, Bitcoin goes up. I don't know what this means yet. We need to talk to Gemini as well. We need to talk to ChatGPT too. I can read your thoughts in the comments. Why is it like this? I don't know why the market is moving completely opposite to Saylor, but right now this is really happening, and another Bitcoin sale worth about $1.25 billion is expected from Strategy in the coming periods. Let's see if Bitcoin will rise again after the news of the sale. We will all see this together. Now we've come to my favorite, most entertaining part. Those who follow me regularly know this well. I always say this, stablecoins are very valuable. Stablecoins are very valuable because stablecoin companies operate just like central banks do. They produce money with almost no expense. They invest that money in bonds and interest-bearing assets. They make a lot of money with very low risks. In the image you see on the screen right now, there is about $10 billion, and this $10 billion is Tether's net profit for just 1 year. In other words, they've put this money in their vault, friends. Now, when we look at stablecoins, friends, we see that Tether technically has $184 billion in its reserves. Circle has $73 billion, DAI has $4.5 billion, and so on. Even the smallest coin has billions of dollars worth of coins, friends. This means, for example, I want to buy a cryptocurrency, and I did. For example, I have $1,000 and I deposited it into Binance TR. But right now I don't want to buy Bitcoin. So I say, let me wait in Tether, and I go and, for example, buy 1,000 Tether. Now, up to this point, everything is great, but Tether earns an annual interest of 3.5 to 4% with your $1,000 without doing anything. In other words, they take that $1,000 and earn 4% annually. Come on, man, 4% of $1,000 is $40. Whether it earns $40 a year or not, it's not a big deal. First, there's no risk. Second, it's not just $1,000, there's $184 billion in the vault, earning really good money without doing anything. I mean, when I say without doing anything, this is what I mean. Of course, they'll ensure the security of that money, they'll provide software support, but there's a huge profit margin. But what do we say in crypto? It's not companies that matter, it's individuals, people who are important. So let's say this 4% or 5% interest or profit. Which company is sharing it? Is it Tether, Circle, DAI, or Athena? Almost none of them share it. Here, friends, more than 140 very powerful institutions in the market are coming together and saying, you know how we say open seas, open source, open AI, open artificial intelligence? Here they're saying let's create OpenUSD. In other words, let's create a dollar that belongs to everyone. Let neither central banks nor companies make money from it. They say, let those who hold this money profit, let individuals profit, let people profit, let you profit. Which companies are involved? Giants in the market like Visa, MasterCard, BlackRock, Coinbase, Stripe, Shopify. More than 140 giants are coming together, forming a consortium, and now, after deducting costs and operating expenses, they say they will distribute the remaining profits to those who hold this coin. Let me put it this way, just to give an example. For instance, you have 10,000 Tether and you forgot about it. After a year, you receive $350, $400 out of thin air from there. You had forgotten about it. Then you check and realize, I had 10,000 Tether in my wallet, and now you can think of it as having $10,350. Of course, this isn't for Tether, it's for OpenUSD. I think this will be one of the biggest revolutions in the market. I support it. This will be a great development. Now, friends, as we come to the end of the video, we will take a look at the partial technical analysis of Bitcoin, gold, and silver. Here, the red line you see is the 200-day moving average. The green curve is the 50-day moving average. This is what we want. We want the 50-day moving average to rise above the 200-day moving average so that we can understand the market will go up. This is what we want. Now, when we look, for example, right now we have the gold chart in front of us. There is a 50-day moving average that has fallen below the 200-day moving average. So the recent trend is going downward. The point where these two charts cross each other is called a death cross. In other words, a death cross. And for example, friends, this last happened in gold, so I'm checking when it last happened in gold. And the last time it happened like this was in 2023. Look, when I enlarge this chart a bit more, you can see that in 2023 they cross, and right after that, we see an ounce dropping from $1,930 to $1,800. And we see gold dropping by about $500 to $600. But this doesn't last long. Afterwards, it recovers again and performs much better. So this means the following. The death cross is a death intersection, but it doesn't mean the game is over. It's an indicator that works a bit late. It means that in the near future, the decline might continue a bit more deeply. Or it can be interpreted as a delayed reflection of a recent drop. Why am I sharing this? The death cross is not a good thing. It's wise to be cautious. But this doesn't mean that gold won't rise again in the short term. But right now, a death cross has occurred, both in gold and in silver. Look, it just happened in silver, and silver dropped sharply from $120 to $55. You know how they call it the devil's money. And on top of that, it experienced a death cross. Because it had risen so much recently, it experienced the death cross later, and the declines may continue a bit more. That's why it's wise to be cautious. Look, I'm not saying this for sure, and in the same way, Bitcoin also experienced a death cross. It happened a bit earlier for Bitcoin. It happened around November 2025. We all know the reason why. So, when we look at the technical levels for Bitcoin, friends, for Bitcoin to break free from this downward pressure, it first needs to get itself above $65,400. It needs to linger there for a while. Then, it needs to break through this 69,000 resistance with strong volume, friends. That would be a good signal for us, for Bitcoin. Friends, when we look at gold, first it needs to get itself above $4,205. It needs to gather some momentum in this area, and then for gold, another resistance level is $4,360, friends. Once it breaks through that area as well, gold will try to recover its past performance. As you know, gold had also risen above $5,500. After that, we saw prices around $3,900 for the ounce. These are very sharp drops. Silver, on the other hand, was one of the worst performing assets. Actually, it was both the best and the worst, because its volatility is very high. It traded with even higher volatility than cryptocurrencies. That's why, friends, silver shouldn't make up such a large portion of your portfolio. In other words, you can't hold 20% in silver. Holding 5% is more ideal, because when it rises, let me give you an example. Let's say you have $100,000 and $5,000 of it is in silver. Suddenly, it can spike so sharply that it turns into $30,000. So now $30,000 of your $100,000 is in silver, or 30,000 out of 130,000 is in silver. This signal shows you the following. Reduce your silver holdings back down to 5% or 10%. Buy more of what hasn't increased in value. For example, when we look at the S&P 500, we see that this is the area with the highest bubble. It keeps hitting all-time highs, and still, no one knows where it will turn around. That's why if I were to invest money right now, I would prefer products that have dropped in value. Gold seems a bit safer to me. As for the S&P 500, you can continue investing, but not with too much enthusiasm. But where will it stop? Maybe it will go even higher. It might reach 10,000 from here, or even 9,000. We don't know this. That's why the S&P 500 and Nasdaq are valuable, but not overly enthusiastic. More control. I hope my video has been understandable, friends. Thank you for watching. I eagerly await your comments. Hope to see you in the next video. Take care.